I may be a little biased, having worked for the best life insurance company in the US for quite a while. But there's a bit more to this video than just getting your insurance from Northwestern Mutual. We can file this video under the category of shitty financial advice, because this one is going to end up costing you a ton of money if you fall victim to this scam. Yeah, I'll call it what it is. It's a scam. I'm Scott Sery, and I founded Know to Grow on the idea that everyone deserves to get paid handsomely, and they should be paid for doing something that they love to do. The program teaches you how you can make the kind of money that you deserve to be making. Now, as you know, I like to find financial advice on these big name personal finance blogs, and then I just tear it down. Now, there are a lot of good ones out there, but if you scroll back to some of the crap they posted 10 or 15 years ago, it's really bad. Some of that really bad advice, however, it just won't die. Similar to the video I did a little bit ago about the articles that list out the best savings rates, this one is all about getting the cheapest life insurance. But it has just kind of a slightly different twist on it. Most of these blog owners are not licensed to sell insurance. And even if they were, they're catering to people all across the country, and very few of them are going to be licensed in all 50 states. There's just a lot of regulatory stuff that goes into this. And so they would have to be really careful. But what isn't regulated is collecting information on people who express interest in life insurance and then selling that information. They're not selling anything to the person that wants to buy their insurance. They're just getting their personal deets. And since most people that are reading this info on these sites are all about saving as much money as possible, these sites are playing up the fact that you can get your life insurance for a whole lot cheaper. Let's just shop around a bit. This is something that works really well with home and auto insurance, but it's really a bad financial move when it comes to life insurance. And there's two good reasons for this. First of all, your health and your insurability are going to change over the years. And if you happen to cancel one insurance before another one is firmly locked in place, and often there's a 2-year look-back period that you have to go through, and you find yourself uninsurable, you're SOL. In that case, means Scott out of luck. But if you put on weight, you started smoking, developed an illness, or took up a dangerous hobby, you can end up having your claim denied or your policy rated. Rating the policy just means you have to pay more for it. Second of all, not all life insurances are any good. Not insurance companies. There are a lot of good ones out there, and there are a lot of really crappy ones. For example, just a metaphor, a simile here. I can go to the dollar store and buy a 4-ounce steak for $1. At least they say it's a steak. Or I can go down to my local butcher and pay for a 4-ounce steak. I pay about $8. It just kind of depends on the cut. Both of them are steak. They're both beef, supposedly, and both will provide food to my body. One is going to taste good and provide actual nourishment, while the other one, who knows what it's actually made out of. When you go with a cheapo insurance company, you risk that company will deny your claim on a technicality, such as, if you look at page 197 of your policy, it distinctly says that claims for deaths that occur inside the states with the letters A, E, I, or U in them are denied. The other factor is that most of the time, you're not going to be locked into one rate. Insurance companies generally have a teaser rate where your first year is really cheap, and then they hope you don't notice when they jack your rates up the following year. This actually happened to me with car insurance. I switched to a company that I had never heard of before, and 12 months later, they raised me from about $600 a year to something like $1,400 a year, just hoping I wouldn't notice and I'd pay the bill. So, shitty financial advice here is that you can save money on your life insurance by shopping around just like you would car insurance. But eventually, you're going to be uninsurable or have a rated policy or otherwise just be unable to shop around. And then those rate increases are going to hit you when you really have no other options but to stick with the crappy company and pay out the nose. Instead, find a reputable company, get it locked in, and when rate increases happen, just earn more money on the side to make sure that you can pay for the insurance that's going to take care of your family when you're gone. I'll show you exactly how you can afford that insurance using the skills and the talents that you already have and things you already love doing. Swing on over to www.knowtogrow.com. Sign up, and from there, I'll be right by your side as you go from having no idea to growing that idea. And before you go, please hit that like button, maybe give me a comment, and tell me how you've been scammed or not been scammed by shitty insurance deals. If you sub for me, I can get you more shitty financial advice in the future.